or international clients. As you know, foreign partnerships and foreign disregarded single owner entities file a foreign information return. And they are really just that. There's just information, no adverse tax results going to take place because they're pass-through entities. It's a good place to make tax elections, good place to do tax planning. We'll talk about that later on. But Form 5471 is involving a C corporation. Every foreign corporation is a C corporation. It means that a mistake is going to cause taxation when it's unexpected. So the trick with Form 5471 is to, once again, work with the client and do a pro forma 5471 mid-year, because there are some year-end tests. There's some quarterly tests about investments in U.S. property, and that's Section 956. We're going to see that briefly here. And the other trick is to be sure you're filing the right parts of the tax return. And the IRS breaks this up by category filers. And there's a little bit of, it's not deception, but it's an easy way to misread who has to file what. So a Category 2 filer is a citizen or a resident who is an officer or director, in which a U.S. person, so not necessarily your client, in which a U.S. person has acquired 10% or more of the stock. And you see that the law is talking about both voting stock and non-voting stock. So back to what I was saying earlier, the taxable income only goes to the voting power, but the controlled foreign corporations for this last decade or so have looked at non-voting stock, because that was one of the loopholes, and they closed it up. But the, whoops, here we go here. But the test for this is people who have acquired an increase in stock or have increased their stock threshold to be 10%. So that's the trick there that you want to watch out for, that you don't get caught by it. They like to talk about the stock ownership requirement for Category 2 and 3, which is what we're working on now. And the threshold is met if 10% or more of the total value of the stock of a foreign corporation, or 10% or more of the total combined voting power of all classes of stock with voting rights. So they're trying to cast a broad net. They're not looking at the constructive ownership rules. Remember, we saw that on Schedule O? So this is just who has to report, and you do not report under the constructive ownership rules. That is to determine if you have a controlled foreign corporation. So Category 3 filers is the U.S. person who acquires the stock, who's already owned stock and acquired more stock. Down here, Section 953, this is the captive corporation rules. That's on any U.S. shareholder. A U.S. shareholder a person who becomes a U.S. person while owning the stock. Somebody moves in from the U.K. and they get a green card and they become a U.S. person. They start to file this return. And a person who disposes of sufficient stock in the corporation to reduce his or her interest to less than the stock ownership requirements. So they want to see you on the way out. That is the important part to look at this. The Category 4 filer is a person who, as a U.S. person who had control for 30 days during the year. That happens when there's a shift sometime, maybe in November, and they have it for the last part of the year. This is important here for U.S. person. Is a U.S. citizen or a resident, or a non-resident who is elected to be, in effect, be taxed as a U.S. citizen. We see that with spouses sometimes because they want to file a joint return. This is more of the same on that. Control, I don't know why they're getting into here to control. Control means more than 50% of the combined voting power of all classes of stock. But control means more than that. Control also means if you control the board of directors. Going back to the nominee shareholder, the client has his brother who owns the shares of the stock. The client owns the shares of the stock. His brother is just a nominee. So it's important to drill down, and you'll see that these that the foreign client quite often really believes that they're doing everything correctly. It's a very difficult conversation. Category 5 filer is the U.S. shareholder for the period of 30 days, and he owns it directly or indirectly or constructively. So here we get into the constructive test. And this type of test, you really need to do the chart because it does get into the constructive ownership rules. It gets into the captive the captive insurance company rules. And you need to just tell the client, you need to spend the time and to do the chart. What we're going to look at here is what happens to the different types of reporting. And you're going to see that the type of reporting that is the most onerous is the category 4, because this has Schedule M, which is the earnings and profits. The earnings and profits is a very difficult concept. The rest of these schedules we'll go over. They're pretty easy. Schedule O we went over already. That's somebody coming in or somebody coming out. So keep this in mind. This video is going to be studying by itself. You can pull up the instructions as we go over the video if you have a connection to the web. But with this, we're going to go ahead and close off this video so that it can be easily played again. And we're going to go on to the form itself.